Hey, welcome back, everybody, to the Today's Market Explained. This is a four-star, what do we call it? A four-star media event, four-star podcast, video series, video clips, everything else. And we're here to have a market commentary discussion, is our traditional way with my co-host, Chris Reardon. Chris, welcome to the podcast.
Thanks, Brian. Good afternoon, everyone, and glad to be on. And you could also call this a four-star spectacle as well. But talk a little bit about the markets.
Okay, we'll call it the four-star spectacle. Chris is our director of development. He's the master of all portfolio things, and he still loves his Cleveland Indians. I don't know why. And is caretaker of his golden doodle puppy Hudson, and he's got a burgeoning family as well of 3 young kids under age of 2. So welcome again, Chris, to the podcast. I'm Brian Kasal, the founder and CEO of 4-Star Wealth Advisors. I'm an Eagle Scout, a trustee of the National Boy Scout Foundation. I'm an advisor to CEOs and insiders, chief dad to Quinn and Evan, husband to the amazing Tripty, my wife. And if you would, please give us a 5 out of 5 when you do your evaluation. That makes us look good. And we hope we meet that challenge. And today we're going to talk about the markets, the economy, and things that we see out there. There's a lot of interesting things happening. Today's the 14th of September. And Chris, tell us what is going on in this crazy market now, positioning wise. What's up and what's down, and what's in first place and what's in last place?
Yeah, so not a whole lot of change. Most of the changes from the last podcast occurred in the top 3 asset classes, but we still have domestic equities in the number 1 position, so it's still leading the way. It moved down 5 points from the last podcast to 261, so kind of a slow pullback there. International equities is in the number 2 position still, and it's at 251, and it pulled back 4 points. So we kind of have the number 1 and 2 positions both moving backwards, almost in tandem, kind of at the same pace. And then in the 3rd position, you have commodities, and that was the big winner since the last podcast. It's up 13 points since the last podcast at 243 in 3rd position. So it's closing the gap fairly quickly on that number 2 position. We could see really any week now, depending on the movements, we could see that overtake into that number 2 or even the number 1 position if we have a lot of volatility. So it's really a 3-horse race, if you will, at the top for that top position. Then cash is the number 4. It was equal on the week, so a bit of a slowdown here. It's at 145. And 5th, we have currencies equal on the week since the last podcast as well. It's at 101. And fixed income is in last still. It's -1 since the last podcast and at 82. So really not a lot of movement in the bottom 3. The movement's really been in the top 3. And really, you just have almost the top 2 kind of coming back down and the 3rd position moving up. So you have them kind of converging on the same point, really. So it'll be really interesting to see what takes over that leadership role in the next coming months.
It would be. Yeah, so we're seeing the stocks fade a little bit with no real change. Commodities rally. That's mostly oil, Chris, right? Pretty much.
Yeah, that was one of the big drivers was oil behind that commodities number.
Exactly. And then we're seeing a lot of little movements in commodities over time, but commodities have been rallying for a while now. Last year was a big year, and then it faded at the beginning of this year. Now we're seeing a little bit of movement back upward. So it's hard to really tell what's happening. But these indicators give us a really good picture. And then we just try to understand exactly what's working and then be in the right areas and avoid the weak areas, which is really the most important thing. You can make a lot of money by not losing, right?
Mm-hmm. Yeah, that's how you make, I think, the most money in some cases is just avoiding those big downturns in the long run. Can really,
Well, and the market's gotten a little bit sloppy. So we're seeing the consumer price index has had a big run, has had a little spike here again, and people are a little worried about that. We're seeing some currencies get weak due to American interest rates rising. Chris, you've got a lot of comments on the economy. Why don't you just get right into it?
Yeah. So a couple big economic numbers came out. I think that the biggest one came out this week on September 13th. The CPI number came out. And it came in at 0.6% an increase month over month. That was the August read, and that's up 3.7% year over year. So it reaccelerated a little bit So we did see a little bit of a reacceleration there. The main contributor, and we kind of alluded to this a couple podcasts ago, but the main contributor was the jump in gasoline prices, which rose 10.6% from this last month over month. And that accounted for more than half of the increase we saw. So big jumps there in gasoline prices. I'm sure a lot of our listeners are feeling it at the pump or seeing it at the pump reflected there. Other major contributors to this jump, though, were other goods and services were up 5.8%. Housing was up 5.7%. So for a while there, we saw housing prices drop, but kind of towards the end of summer, we started to see them base a little bit, and actually housing prices increased slightly a little bit again. So housing is up 5.7% month over month, and then food and beverages were up 4.2%. So we're still seeing a lot of expensive, grocery stores, food in that regard is still very expensive. The one bright side, if you will, to that the numbers was the core CPI, which as a reminder, the core CPI excludes food and energy, which tend to be more volatile. That was up 0.3% month over month in August and 4.3% year over year. And the positive to that is that's the lowest level since September of 2021. And that's been on a steady decline, whereas the general CPI number has started ticking back up a little bit after declining for several months. So, a lot to digest there. But, and Brian, do you have any comments?
Yeah, there's a lot of money in the system. And, when President Biden and company passed the Inflation Reduction Act, that was an oxymoron, obviously, because spending money increases inflation. So everyone knew that wasn't real. The name wasn't real. And of course, in a candid moment, President Biden just recently said, I wish I hadn't named it that, because it really wasn't an inflation reducer. And it had spiked inflation. And so now they're trying to get inflation down, but yet they're still spending more money. And so it doesn't make a lot of sense. So we're starting to see the inflation starting to tick up again. And we'll see if it's going to go back down. Certain things did go down. Certain things are seasonal, like travel. Right around the time that we were booking all the flights for our conference in June, all the airline flights were at their highest point. As the summer travel kicked in, and it was a record travel boom for America in the first 6 months of this year. Now things are slowing down now, but that's seasonal, right? So that's not like normal inflation. So we're seeing air flights go down, but basic foodstuffs are still up. Cars are still up. We're seeing a potential UAW strike, Chris, and you're going to talk a little bit about that. Could lead to increases in costs of cars. So a lot of goods are still rising in price. There's a lot of shortages still and demand issues that lead to higher prices. So CPI might go back up. It's crazy.
Yeah, and it's a very real possibility, as you kind of mentioned, Brian. Most likely, I mean, we're kind of a couple days out, but the United Auto Workers Union is going to strike. Most likely, it's set to start unless there's some last minute deal brokered next week. And if that goes on for say a month or approaching a month, we could see that impact the supply chain for cars, and it will look a lot similar to you guys remember during the pandemic how hard it was to get a vehicle or a car, and that was due to the chip shortages. But it's going to feel a lot like that. And so what comes with that is the spike in prices. You have low supply, assuming the demand stays relatively the same. We're going to see a spike in maybe used car prices, new car prices, things like that. So, there are some major headwinds potentially for the CPI number that could spike it back up in the short to midterm. We'll just have to kind of wait and see, though.
Mm-hmm.
Then a couple other things came out. The Americans' inflation-adjusted median household income fell to $74,580 in 2022. That declined 2.3% from the 2021 reading of $76,330. So I think a lot of Americans are feeling this. I mean, you think about it, a household income of 75,000, let's just call it, in general in America, most people would count that as a pretty good income. But I think you're hearing more and more with this high inflation that, people are making this money, but they're still not able to keep up with bills and grocery bills and things like that. So depending on where you live, this varies somewhat, but, we're hearing that, and I think a lot of people are upset about it. That yes, they might be making a decent salary, but when you factor in inflation, most of them are actually end up losing money, and that's what we saw this past year. And then the last thing I'll highlight from an economic standpoint is the U.S. employers added 187,000 jobs in August, while the payrolls in June and July were revised down a combined 110,000. So what that's kind of really showcasing is really a slowdown in the jobs market. Really towards the tail end of summer, we're starting to see a bit of a slowdown there. The unemployment rate for August was up 3.8% from 3.5% in July. So starting to see hiring slow a little bit, unemployment tick up a little bit more as well. So if that trend continues, I mean, these are, that's demand increase a little bit. These are things that could potentially push us into a recession. We don't know if it will or won't, but signs that we are starting to see the economy slow down, and that's normal. That's what the Fed wants to do. That's higher interest rates. There's a higher cost to bear for companies, employment, everything becomes a higher cost. So it's not unexpected. We would expect to see this, but we'll just kind of have to see how it plays out and the level of impact it has in the long term, over the next year or so.
Exactly. So, Chris, there was a talk about a major lithium mine that came on as well.
Yep. Yeah. Interesting. This is relatively new news, but a potential major lithium mine was found between the Nevada and Oregon border. And if the initial results hold true, the mine could have as much lithium as the next two major mine-producing countries combined. So we're going to see potential huge value there. Not only is lithium used for electric vehicles, which obviously with the current administration is a major goal of theirs to have electric vehicles, but we also have China, and we've obviously been at odds with China. There's been a lot of friction the last couple of years with China, but China's gone out and really gobbled up a lot of the lithium reserves, lithium mines. So supply-wise, we'd be heavily dependent on China. And if anything were to happen or fracture between our countries, we were moving towards this electric future with batteries, we'd be heavily dependent. Just like the pandemic, we could see issues. So the fact that we have this lithium mine here potentially would be a huge boost for the U.S., not only from a ESG standpoint, I guess you could say, but also from, I believe, a kind of homeland security standpoint, having that onshore here and being able to kind of mine our own lithium and produce that. So then we also had OPEC Plus, which is OPEC plus Russia, have continued to have their cuts of oil kind of coming out, oil barrels. So they tighten supply and they're driving the price of oil up. So we've even seen some smaller producers in the U.S. come online, and I believe the U.S. oil barrel count went up slightly supply-wise, but we're still seeing the price of oil. I think right now it's projected to be over $100 a barrel, potentially by the end of the year. So once again, I think a lot of people are feeling that. I know we certainly are here in Illinois at the pump, as we've seen prices shoot up really in the matter of a couple of weeks, shooting up almost $1 in some cases. So, major jumps there. And then the last high thing I'll highlight from a commodities perspective is with a lot of countries, and this kind of wraps up into the whole kind of ESG, if you will, a lot of countries are looking at nuclear power, which for forever was really frowned upon. It kind of had this stigma about it. But in reality is one of the, if done correctly, one of the most effective ways of producing power in an environmentally friendly way. So we're starting to see countries kind of really embrace reality, if you will, and bring older power plants back on and start planning for new nuclear power plants. And with that, we've seen a surge in the demand for uranium, which is a major, obviously, component needed for nuclear power plants. So we've actually seen the price of uranium, the commodity uranium, go up 30% in 2023 as supply and demand have been significantly off balance. This increase in demand, supply really wasn't there. the suppliers, the uranium miners for the last decade really haven't really been trying to expand their operations because it's been a dwindling market, if you will. There hasn't been the demand there. So we'll see if that picks up. But in the short term, we're seeing kind of a crunch, if you will, on the price of uranium, with the supply and demand issues.
It's interesting, and we've let a lot of our rare earth metals go through competitors, basically coming in and buying up all our stores. So we're getting lucky here a little bit, picking up some lithium because sold so much of it's the control of the Chinese and others. So that was a good sign. Although it's luck, and we shouldn't only rely on luck as a country. So, but it's still good news, Chris.
Yeah, and there still is, the current administration has in the past actually barred mining for certain rare earth minerals. I think the most recent one was in Minnesota. So the hope and expectation is that won't occur here. But there still is obviously a lot of things that need to be figured out moving towards the future. But like you said, Brian, I think it is a bit of luck that we had with it.
No doubt. Well, so there we have it. One other thing regarding the economy before we move into the general what we see out there, the Great Resignation has ended, where people were basically leaving their jobs and everything. Now, job openings have dropped to a 2.5-year low. We're starting to see there's big changes in the labor market. And Chris, you mentioned that they had revisions of the last 2 months worth of job growth to very anemic numbers. They were still positive, but not much in July and June. And so now we're starting to see the ADP payroll coming in well below expectations. The U3 unemployment rate went up to 3.8. That's the highest since January of 2022. So, some of the effects of inflation now are starting to affect job growth. They're starting to affect people's pocketbooks. And so, it looks like a recession is coming. It looks like we might be already on that trajectory. The question is, of course, how bad is it going to be? and is it just the mild recession like 1991 was a mild recession? 2008, 2009 was, or I'm sorry, 91 was a mild recession. 2001 was a mild recession. But 2008 was a terrible recession, very bad. So we'll see how it shakes out. So, much more to come on the economy, and we'll keep watching it, and we'll come back with more thoughts on it in future episodes. Moving on to what we see out there, there's a couple of things I wanted to mention. We're starting to see higher education declining. From 2019 to 2022, there was actually a decline of 8% of enrollment in college level courses in America. And part of that had to do with, obviously, people weren't able to go to college. So there was a little bit of element of folks not being able to really physically be in college, and it's not really the same experience. But at the same time, it also, higher education is getting so expensive. It never used to be that way, but in the last 30 or 40 years, it exploded in price, where the top schools, the Harvards and others, are significantly higher. They're hundreds of thousands of dollars for undergraduate education. So there's cultural issues now on campus as well, like restricting free speech, like I mentioned, the high cost of tuition. Some colleges never really have recovered from the 2008 downturn. And so that, but we still saw the top colleges tuition increasing. Now that's starting to change a little bit. There have been a few colleges that closed in the last 5 years or so, and then a couple closed during the pandemic. So there may be finally an answer coming. Everyone thought that higher education could never go down, and that's what everyone always says, right? Usually right by the beginning of the decline, but it was getting that feeling like it was never going to go down as far as cost and everything. So we're starting to see a little bit of relief there. Chris, you had some comments about the Apple, if I remember right.
Yeah. So Apple had one of their marquee events this week, and one of the big things that came out of it, there wasn't big changes that they were making to the iPhone overall, but they were actually moving away from Lightning chargers, which was a proprietary Apple kind of charging station, and they're adopting the standard USB-C port. And this was actually interesting in several ways, but I think most prominently, people have seen it in the news from in Europe. There was lawsuits filed against Apple over having this Lightning charger port, and it wasn't standard. And And so it's kind of interesting, but we finally saw Apple relent and adopt the USB-C. So I think a lot of people will be happy with that moving forward. A lot of laptops, a lot of other just tablets, other devices use the USB-C kind of cord. So it makes it a lot more universal for when people are on the go and charging their products. And then a couple other what I see out there items. Las Vegas hotel workers are one step closer to a potential strike. So we could see hotel workers there striking as early as early October. I think the vote is on September 26th. So really, realistically in the next couple of weeks. And that could cause a big headache. If we see striking hotel workers there, that's going to cause a lot of chaos in the Sin City. So it'll be interesting to see how that plays out. And then the last thing I'll touch on is J.M. Smucker is buying the Twinkie maker Hostess, and the deal that has the Hostess being valued at $4.6 billion. So we're seeing Smuckers move into a snack and snacking kind of a market there. So it'll be interesting to see how that plays out too.
It is, yes. So another really interesting trend that affects education is public schools, and of course we've seen the very, very aggressive nature of school systems now, and certainly high school systems and grade school systems around the country. A lot of that originated in Local 1 in the Chicago area, and they've now exported some of their very aggressive activism around the country. So they've been striking, fighting for higher wages in the schools and getting it. And then, of course, it ends up that, many of the people who were fighting for higher wages and everything also were fighting to keep the schools closed during the pandemic. And so then we saw photos of teachers on the beach trying to teach, remotely on the beach. And it was really, some people think it was more about a vacation than anything else. So there's been some bad behavior in the teacher world. And so now we're seeing the effects of it. We're seeing a record number of people leaving the public schools. So they're voting with their feet and going to private schools, or whether it be religious-based schools, Catholic schools, Jewish schools, whatever it might be. So it's really striking and sad change in public education. So I think that, sounds to me like the whole industry needs more competitive activity and the pure insulation of the different unions that run the schools is just hurting the schools and hurting education and hurting children. So we're certainly advocates to make the schools better. Public schools should be good. They don't seem to be good. They certainly aren't good in Chicago. Many areas of the big cities, the public schools are no longer what they used to be. And that's really quite a shame. So Chris, let's talk a little bit about China. The economy in China is slowing, and why that matters is obviously China is one of the biggest manufacturers in the world. They have an aging workforce, and it was only 3% growth in 2022, their economy, and it was even going to be even slower in 2023. So there's a real estate led boom. The migration is mostly over, where folks left the rural areas and moved to cities where they were building more and more. That's kind of over, and the local governments were running deficits to keep the real estate boom going. Now they're teetering on default. So the Communist Party is taking more control of those governments, and they're using this as an opportunity to, take control more and more of the other areas of the country that they don't have really total control over. In the Chinese Communist Party, they're cutting off credit from banks. Exports from China have now dropped to 2006 levels as more and more countries realize that China is really not their friend. China is trying to take the world control, certainly over America. So they've vowed to come after us. So everyone's they're onshoring, meaning they're bringing their manufacturing back to the United States, or they're moving it to other areas of Asia. But at the same time, not all the exports that would normally have gone to the U.S. are lost. They're going to other countries, and so they're actually white labeling it, and they're finding a way to get imports into the United States, but not from China. They're going through Brazil and Mexico and other countries. So it's going to be very interesting to see how it plays out. But there was a G20 summit in Delhi, and China was not there. And one of the top reporters of the Asia Times talks about how China's so important now that the Chinese leader doesn't want to go to general groups. He wants people to come and see him. So that's what people think, that he's not going to attend these summits anymore because he thinks he's in charge of the world, and he's not going to go to a general meeting. He wants everyone to come to him and kiss the ring and stuff like that. So President Xi is really taking a controlled position on the world. It's ironic, though, that they're doing so poorly as a country right now. So, based on purchasing power parity, China is already larger than the US, but at much, much lower prices. So with the slowdown now, they will take over, from America as the leader, but it'll take a couple of decades to get there because they've got a population that is 3 times the size of America's. Although their population is declining, our population is growing. China is getting stronger in autos and computer chips. They're already dominating India and Mexico. So we'll see how it goes. I'm kind of rambling here about China, but it does seem to be that they play by different sets of rules, meaning not our rules. And they're trying to take advantage of the fact that they will do things we won't do. So America tries to play fair with everyone, and not every country is like that. So we'll see whether the coming China collapse does happen, according to Gordon Chang, author, or whether they just pause for a little bit and keep growing. We'll see. But there's lots of structural problems. And fundamentally, if you don't have the right incentives in an economy, then people don't act the same way that they would in an economy like in the West, capitalism. So we'll see whether they're able to get through that. There's some big changes in the airline industry too. Air India was sold to the Tata family. So Prime Minister Modi sold it to endeavor to make them the best airline in the world. We just took a trip on Scandinavian Airlines and lost baggage on both the outbound and the inbound. So that wasn't terribly impressive. So the airline industry is undergoing some strain. They had a little bit of a rally here as we had the record travel boom, but now that's slowing down again. So we'll see, what airlines survive and what industries survive in the travel industry now that we're seeing a little bit of a pullback. So those are our comments. Chris, you got anything else for us today?
No, yeah, I mean, just one thing I'll highlight. The China issue is definitely, here, and obviously they're a large portion of the global GDP. And I think a lot of what they're going to be dealing with is really systematic. They have the younger generation that went out and got college degrees, got educated. A lot of them got educated in America, and then they go back to China and the jobs just aren't there. That's why we were seeing, these youth unemployment numbers of 20-25%. And that's because China can't, if China just continues to always be this manufacturing powerhouse with cheap labor, then what are these, this group that wants to better themselves and is getting educated, what are they going to do? So they're really running into this back and forth, and ultimately what the US did, obviously, is we transitioned out of kind of the industrial revolution, out of that, and to more of a service-based economy, which is what we are right now. So it'll be interesting. I mean, there's a lot of potential outcomes and a lot of major outcomes that could really have a big impact on the world.
Yeah. So we'll see. So there's we're coming back to school now. Kids are back in school. It's the fall, and things are changing. Everyone's back from vacations. The travel boom has slowed down a little bit. So we'll see where the economy goes from here. We'll be back in a few weeks to report on what we see. Markets are still not too far from highs. They're only about 2% off their highs. Mm-hmm. And whether that's just the pause that refreshes and markets finally start to break through this 35,000 level on the Dow Jones and goes higher, Chris, or whether we're in for a big pullback or a big downturn. If they're projected to be a big recession, we'll see. But be back to report on it. And I think that's all you got. I think we'll leave it there.
Sounds good, Brad.
All right. Well, thanks everybody for being with us today on today's Market Explained again. And we'll be back in a couple weeks with another episode. Until then, hang in there, everybody, and we will talk to you soon. We'll leave it there today. Bye-bye now.